Hello guys, I welcome you all to today's video. In this video I will be sharing with you how to detect the spikes in boom and crash. Okay, how to detect the spikes in boom and crash. If you have been looking for an opportunity to identify where spikes usually happen, then definitely you need to watch this video to the end. It's going to be a full training session and we're going to introduce you to the training session today, and of course we build on it in my next video. But before I go fully into it, in case you are joining us for the first time, I welcome you all to Qora Digital Cash. This is a platform which I used to share with you my ideas on how you can make some cool cash for yourself online, most especially within the Forex niche. All you need to do is just to take some time to browse through the channel, watch my training videos, practice and perfect your trading skill first on your demo account before trying them out on your real account. And if you love my videos, can you give me a thumbs up and share with families and friends? And if you are yet to subscribe to this channel, can you do so right away so that you can be notified whenever I upload a training video like this. So quickly, let's go straight into what we have right here. Like I said earlier on in this video, I will be sharing with you how you can detect the spikes in boom and crash. So let's go straight into what we have right here. So just follow simple instructions and you will be able to have it done easily. Okay, so like I said, okay, let's move on to the chart. Okay, one major problems we usually have is the spikes. Okay, in case you don't know what spike is, you can see this is boom 1000. Naturally, if you are trading boom, it goes down gently and you'll be in profit until you see a sudden spike happening right like this. Okay, it can just go up all of a sudden and claim the whole of the candles which you have created, most especially on 1 minute time frame. It's so funny. On 1 minute time frame, it's that disaster, that monster that most people usually get scared of. Okay, so that is it, and you just see it's popping up all of a sudden and you get scared at that point. Okay, so that is one thing that we always get scared of. Okay, but there is one thing I need you to know. Okay, for instance, around here, you can see you can just be in the market, it keeps on going down and down and down, and around there it just pops up. You can see, you can imagine you spending a lot of minutes to achieve this profit and using it, losing all with a single spike. Okay, with this single spike you can lose everything. Okay, that is what the spikes usually does. Okay, so this is what you need to know. Okay, there is no exact place that the spike will happen. There is no there is no assurance that a spike will happen at an exact place. There is no way you can know the exact place, but you can know where it is most likely to happen. Okay, you can know where it is most likely to happen. That is one thing I want you to have at the back of your mind. Okay, you can know where it is most likely to happen, and if you can avoid those places, then definitely you can milk the markets for a very long time. Then there should be, there is also exact time frame. Okay, exact time that we usually have more spikes happening around there, and I'm going to prove that to you. You can see that this is boom. Okay, you can see around here we were able to see the bearish candle for a very long time before seeing this spike. Okay, we saw another bearish candle for a very long time before seeing this series of spikes happening. Okay, so you can see that we hardly have spikes happening around here. The reason is the market is on downtrend, which is not favorable for spikes at this point. Okay, it is not favorable for spikes, but check out this. Around here the market went back on uptrend, and you can see we had so many spikes happening around there, and most of them are even very long. Okay, so which means the market is on uptrend around here. Okay, you can see the uptrend movement of the market, and so many spikes are happening around there. Okay, so all these are very important, which means you don't sell within this region. In boom, you don't sell within this region because you can be trapped within the market at that particular point. You stay away from the market when the market is on uptrend. Okay, you stay away from the markets. If you don't know how to trade the spikes, just stay away from the market when the market is on uptrend. That is for boom. Let's go to crash so that we get to see more about crash. Okay, let's see how spikes happens in crash also. So I'm going to take it to 1 minute time frame. It's easier that way for us to understand, to see what we're trying to do right here. You can see that when the market was on uptrend, okay, when it was on uptrend, like I said, this is just going to give us more of the intro part of it. When the market was on uptrend for spike, for crash, it kept on going up steadily without the crash down candle, which is the spikes in the in crash. Okay, so it goes up for a very long time with little crash down candle, then goes up again for a very long time with little crash down candle. But thereafter we started having so many crashes happening, okay, because the market is on downtrend around here. So you don't buy when the market is on downtrend. For crash, you don't buy when the market is on downtrend because you can be trapped in the market for a very long time. Okay, you can be trapped in the negative market for a very long time. So if you do so you need to understand when to go into the market and when to exit the market. If you don't know how to trade the spikes in crash, I don't expect you to be in the market within this region, because you can lose all your money if you are buying at this point. You can lose all your money if you are buying at this point. But if you want to buy, you can buy within this region, because you will always end up be in profit if you are patient enough and you use the right lot size that your capital can control. Then you are good to go. So that is one beautiful thing that you need to know. So this is very, very important. So what I want you to know is that these are some of the things we are able to come up with today. Okay, you knowing the exact trend to trade the spikes in boom and in crash. Okay, then you knowing when to exit the market and when to stay away from the market. All these are very, very important. If you are able to put all this together, then you will be able to milk the market successfully. So I want you to go back to your chart, try to identify your trend, try to identify when to go into the market and trade within this period, and of course exit the market when you are supposed to exit. In my next video, I'm going to build more on this so that you guys will know how to go about it. I'm taking it one after the other so that you will understand every bit of it in order for you to have a successful trading activity. So I will be stopping right there. Remember, this is coming to you courtesy Qora Digital Cash, and if you have any question at all, feel free to contact me. My contact details are in the description box below this video, and if you are yet to subscribe to this channel, can you do so right away so that you can be notified whenever I upload a training video like this. You can also join the Telegram channel so that you can learn more directly from me. And if you want to know more about the trading tool which I'm using on my chart, it is called the 3M Trend Milker Indicator. It is an amazing trading indicator that can help you to milk the market successfully. All you just need to do is just to contact me to make an inquiry about it, and of course I will be there to reply you. Thank you.